We've seen in 2020 government's budget deficit is absolutely blown out. I mean, already before the COVID lockdowns, we were looking at 6% budget deficits. We now look at 16% budget deficits. In days gone by, a couple of years ago, we used to moan and groan about budget deficits of 150 billion. Well, this year the budget deficit's going to be about 750 billion. And there's also debt repayments on top of that. So you can imagine, so these are now monster numbers, and we're now adding huge amounts onto our public debt levels, to the point where South Africa looks like it might get to around 95% debt to GDP by 2025. For a country like ours, where we have high interest rates, relatively speaking, that is extremely difficult, because more and more money is being spent on paying interest and not going towards the public. We're also seeing interest rates that are down at record lows, at 3.5%. Our repo rate is at 3.5%. We've never seen that before. So we're at record lows, and yet the economy and the credit growth is still very, very moribund. It's just not growing fast at all. So I think part of it is the lockdown and the inability of people to move around, although that's obviously improved a lot with the lockdown level 1. The other component is, I think the banks are very wary to lend. And what we've seen with the banks is that they've actually started to invest in bonds. If a bank gets deposits, it's got two options. It can either lend that money out, or it can go and invest it. And if the lending environment looks far too risky, then they'll probably go and invest it. Now, our government bonds, certainly our 10-year yields, are good by world standards. They're very good by world standards. So the banks have actually been investing in bonds, and they haven't really been investing in credit extension.